we've seen a lot of liquidity and trading volumes really pull out of the market. And a lot of the bigger guys are sitting on a lot of cash because you're getting 4 or 5% interest in a term deposit or a fixed income security. Why take that additional risk? Now, that will change over the course of the next 3 to 6 months. I think that...
Hello, and welcome to the Market Bull Podcast. Please note, topics and stocks discussed in this podcast are not financial or investment advice. Niv Dagan is the founder and executive director of Peak Asset Management, a boutique investment firm located in Melbourne. Niv started by giving an update on the current state of the markets, highlighting in particular uranium, lithium, gold, and other areas. Niv also talked about an upcoming event, the Spotlight Investor event that's being held in Perth later in October. Here is Niv Dagan.
So hello, I'm Ben Kostrich, and this is the Market Bull Podcast. Joining me today on the show is Niv Dagan, the founder and executive director of Peak Asset Management. It's a boutique private equity investment management firm in Melbourne, and he's joining us remotely. But as we'll discuss later in the show, he's making his way to Perth to help host an event or to host an event. But we'll talk about that later. But welcome to the show, Niv.
Right. Thanks for having me, Ben.
So for those that are naturally unfamiliar with Peak Asset Management, we'll go through a bit about that as well. But since you are the founder and you've been there for an extended period of time, can you talk us a little bit about your history and how you've emerged into this role?
Yeah, Ben. So, Peak's been around for about 10 years. Our whole model is all about co-investing. So Ben or a small cap fund or family office, an institution, a broker will never get a deal from us unless we're personally backing it with our own capital. Essentially, we've got a database around 35,000 people to get like a morning, afternoon wrap, interviews with CEO and your content-driven model, similar to you. 5,000 of them we know are accredited investors and over 1,200 or so accounts with our partner Self-Wealth. We've recently launched an IMA service offering high net worth investors basically an opportunity where we manage their portfolios on their behalf. What we're finding in the market, Ben, is a lot of people know when to get in, but never know when to get out. So that's I think is really, really important. But in everything that we do, we not only have to co-invest our own capital behind, we are sector agnostic. So we look at uranium, we look at gold, we look at lithium, we look at medical devices. But the end investor knows that they're only going to get a deal from Peak in their inbox unless we've met management, middle management, done a full assessment of the company, willing to co-invest their own capital behind, and then help the companies be on capital. So I think that's really, really important.
Yeah, when I saw the ethos almost from the company, that was exactly what you just said there, that it's backed by yourself and you have a specific criteria. And it might just be interesting to understand, given your exposure and length within investing in the market. What are some of them, if you can, without giving away all the secrets of how you evaluate them, but what are some of the key potential factors that you're looking at before making those investment decisions?
Really good question. So the first thing we look at is management and who's around them in terms of the board. Do they have skin in the game is really, really important. So we want to know that the management team in the background have got a track record of execution, of following through, on delivering on timing. And obviously things don't progress, always things cost more and take longer, but we just want to make sure that the management team are aligned with shareholders' interests. I think that's really important. I won't name the company, but just recently the management team through the EGM increased the pay. The shares are falling in value. There's that discrepancy between shareholder interest and management interest. So skin in the game, management's track record and who's around, I think is really, really important. Capital structure, Ben, is also something we look at. How many shares are on issue? Who owns it? Who are the top 20? Do they have basically the top 20 a direct line? Do they have a strategic angle, or are they just passive shareholders? So that's really important. Thirdly, we look at essentially what is currently moving in the market. Obviously the market right now is really, really tricky for small cap investors. Small cap index funds are down about 20 to 30% year on year. So there has been a disparity between the top end and the bottom end. But really, uranium stocks, hard rock lithium, a little bit oil and gas are really the key. And a bit of rare earth, I'd say. We've seen a little bit more of the money flow. So we just want to make sure that the investors or those that are coming in, we're coming into that right thematic in terms of that sector headwind and essentially a thematic headwind. I think that's really important. They're really the main things. And finally, we just want to make sure that given that we are investing in that smaller entities in that sub 2, 3, 4, 500 million enterprise values, that the management are really promoting themselves in a positive light. Whether it is conferences such as ours coming up, podcasts, webinars, on the road. I mean, we're really, really important to obviously, position the company in a positive light. So that's sort of a few of the things that we do look at when we're investing.
And then, I mean, your history in getting down this path of being an investment manager, I mean, what was your attraction or even, I guess, incentive to go down this path and as form a career and a passion for it?
Yeah, look, it's a good question. I mean, I did my Bachelor of Commerce and Honours in Finance. I then got a job at Macquarie Bank. I was on the institutional side of the business during the GFC, so learned a hell of a lot as
Oh,
a
yeah.
young guy coming through. And at the age of 26, I got an opportunity to run a broking firm. So I actually quit Macquarie at the age of 26 to run HC Securities. We built that business up for 3 years, and then they try to IPO the business. They try to sell the business. I then decided to step out and set up Peak, and that was 10 years ago. So Peak's 10 years old this month. So we've been around. I did spend a bit of time in Canada. That's opened the North American market for us as well, Ben. So we do a lot of things into Canada, and we're seeing a lot of money flow coming, call it out of Canadian listed stock coming back into the ASX. But I mean, a really small story for you and your viewers at home is I actually got an internship at one of the large accounting firms, back in first year of second university. And I still remember instead of focusing on, basically insolvency and reports, I was spending a lot of my time just going through stocks. I always knew there was a bit of a passion in terms of investing and looking for the next sort of big 10, 20, 30, 40 bagger. But it is a hard job. I mean, whatever you put in, you get out, just like a lot of the other fields. But I mean, absolutely love it. When things are going well, it's a lot of fun. So I couldn't see myself doing anything else.
I mean, that ties into the whole driver and almost what we should talk about is like the current outlook. I mean, we're recording very early October, and there's always, you could say, seasonality or different impacts, and it's been a bit of a hit and miss market. There's definitely sectors that have thrived, and we'll talk about lithium and uranium and some of the others as well. But I mean, currently, whilst we're in October and almost going towards the back end of the year, where do you see I guess the value and the realization of stock market really sort of going, or where do you see that outlook going for the next sort of period of time?
Yeah, another really good question. I mean, look, I've been in capital markets for about 20 years. I mean, I've seen the top end, sort of the Macquarie and managing funds all the way to sort of the bottom end and managing investors' money. I mean, this is probably the hardest small cap market we've been involved in. There's no doubt about it. There's a lot of uncertainty. I mean, you've got interest rates rising. The 10-year bond rates right now are around 4.7%. The Australian dollar is back down. The Reserve Bank just today came out saying that interest rates will remain on hold. But look, inflation's a problem. I mean, the Reserve Bank and central banks around the world are really doing whatever it takes to push inflation lower. But who says that inflation, Ben, should be 2 to 3% target rate? Why can't it be 4 or 5%? Right? So, you've got cost pressures coming through, the price of fuel. I mean, I went and fueled the car this morning on the way to a meeting, and $2.40, $2.50 a litre. I mean, that's really hitting the bottom line of consumers. So consumer spending's on the way down, interest rates are on the way up. The stock market is feeling the pinch, and large corporates are also finding it tricky. So I think, we are in a little bit of the perfect storm. I mean, there's still uncertainty regarding China, the debt ceiling, I mean, government shutdowns, Europe, concerns about Ukraine, Russia, supply disruption. So I think, the whole thematic about, when you're in debt, you stay out. That's what's occurred, I'd say. And we've seen a lot of liquidity and trading volumes really pull out of the market. And a lot of the bigger guys are sitting on a lot of cash because you're getting 4 or 5% interest in a term deposit or fixed income security. Why take that additional risk? Now, that will change over the course of the next 3 to 6 months. I think that as soon as the market gets a bit more visibility about what's happening globally, about what's happening with the 10-year bond rates, about the fact that central banks will come out saying, look, guys, it's just too high. We're stopping cutting, we'll cut interest rates next. And that will bring a lot of the money flow from fixed income and cash into high-risk asset classes. And we're hoping that will come through over the next few months. And traditionally being the fourth quarter has always been the strongest quarter if you look in the last 20 to 30 years.
Well, it is. It's been a very volatile period for all shareholders or all investors, I should say. But there have been those parts of the market that have thrived. And if we start with the one that's commanding a fair bit of news is naturally uranium. And I've spoken at length with multiple guests about the no-brainer of uranium clearly having to get more attention. And it's just recently broken through on the spot price level of $70, which historically is a huge milestone. And it's a lot of the voices in the industry are saying it's just the beginning. So I wanted to get your thoughts, particularly on the uranium sector and maybe some of the stocks in particular you're focusing on, or areas or jurisdictions that you think have potentially interesting enough for you to sort of warrant a bit of attention towards?
Yeah, great question. Look, uranium, we love uranium. We really saw that as really the next asset class outside lithium, and we IPO'd a business called T92 Uranium. I'll go through the stock specific side, but more the macro side first. I mean, you're looking at governments around the world moving away from fossil fuels, whether it is coal or oil and gas, right? Globally, we're looking for different alternative sources of energy outside, Paul, and obviously you've got natural gas, electricity, uranium as seen as a zero carbon emission and probably the lowest cost as well across the board. So the thematic across uranium, and you mentioned about $70 a pound. I mean, we saw $72 a pound just the other night. And we feel that if things do go well, especially if the US dollar can start to fall, uranium, we can see $100 a pound. You've seen the spot price, ETF up at the record highs, uranium's trading at 11-year highs. We feel that's going to continue. And you've seen supply disruptions as well. We talked about Europe. We talked about Russia. You talk about Kazakhstan. You're talking about, I mean, here in Australia, especially Western Australia, is whether the Australian government will allow, and the WA government coming back into nuclear, which I think that's going to be a big contention over the next few months. And I think the government here in Australia will have to. It's not a chance of when, but it's just if. It's just a matter of when. So overall, we're really bullish uranium, and we feel that's going to continue heading higher in the fourth quarter this year. Going back to stock specific, I mean, we've got CXU, which is Jonathan Fisher. He's coming in to present. Really interesting asset in Western Australia. Small cap at around that sub 10 million market cap. Tight capital structure. So look, that's one that we're keeping and he's a strong advocate of uranium, especially in Western Australia. T92 Uranium, Ben, we're number one shareholder, so we own just under 19.9%. Backed by Tribeca, the Lieberman family. I mean, Boss Energy CEO, Duncan Craig is still there, and Terra Capital. So we've got and TriStar. So really strong investor base. And remember how we talked a little bit about the makeup of that top 20 shareholding. Look, we like the fact they've got the Pascal project, the Parker project. They'll be drilling at the end of the year. They're currently in advanced discussions, and this is public knowledge, with some joint ventures and farming partners to farm into their projects as well. So we're excited. They're sitting under $10 million market cap. In terms of the bigger end, we like Lake, we like Boss Energy, we like BMN, Deep Yellow, Paladin. Those producers traditionally getting an uplift as the price of uranium coming through. And also fund managers are happy to buy the ETF. I mean, for those investors at home and are looking for uranium exposure, rather than potentially take concentrated stock risk, you can always go in and buy the exchange traded fund, which might have 10, 20, 30, 50 uranium names globally through the ETF, which is trading not only on the NASDAQ, but you could also buy one on the ASX. So that's probably the smart way of looking at how to diversify the portfolio.
Yeah, the uranium sector and Australia, it's a no-brainer. We've got sorts of differences with the opinions of what we want to do with it. And I know WA, me being based here, there's going to be election cycles that start looming, and that's going to play a big role in what people do. And there'll be a lot of polls and trying to figure it out. But when you're looking at the global outlook, it really is a no-brainer. And especially recently, uranium has commanded a fair bit of attention, with a lot of it globally going towards that net zero and that renewable future. But the other one that is always still commanding a bit of attention is lithium as well. So within that space, there's clay, there's hard rock, there's brine. There's still a lot of, I guess, flavor and interest in lithium space, given the electric vehicle supply demand picture that we're all facing. But again, there's been a bit of heat come out of a fair few of those companies, or almost a realignment of value. But that almost feeds into this volatile marketplace of where do you actually evaluate these companies. So I just want to get your thoughts, particularly on the lithium sector, because it's hard to pinpoint exactly what part of it you want to focus on. But what are your thoughts on that emerging market?
Yeah, look, I mean, huge money is going into the top end that are hitting results. I mean, look at Liontown and what's happening with Gina Reinhardt. I mean, look at what's happening on Azul. I mean, they raised over a few $100 million at nearly $1 billion valuation. So that just goes to show that there's money going in to those companies that can execute and obviously get results. And obviously Patriot Metals, I mean, that's been an tremendous story for those guys at home as well. In terms of the junior end, I mean, we've got in the conference, we've got Green Tech, we've got Sabre Resources, we've got REC, we've got a plethora of interesting names coming through. But look, anything outside hard rock right now, Ben, is just not getting any interest. I mean, you talked about clays, you talked about brines. I mean, it's all about hard rock, and I think that's going to continue to stay for the fourth quarter. Azul, Liontown, Sabre, Green Tech, REC, Canada is attracting money. WA is attracting money. And also, we've just really recently backed a small explorer called Alderan Resources, stock code AL8 in Brazil. So, look, I think sort of once again, we're not trying to find, where the tipping point in the market comes down to results and comes down to execution. But anything outside hard rock right now, outside WA, outside Canada and James Bay in Quebec, and outside Brazil, is not getting any interest.
Yeah, it's been a frustrating period of time seeing, I guess, people got caught up in the hype train of lithium stock price movements. And then, as you said, the leaders that are actually executing on what they said are dominating and they're doing very well. Whereas we've seen the opposite apply to some companies where there's been some ongoing, share price declines, which has had a lot of people all across, all different forums getting quite arced up. And it's a reflection of the standards of, a lot of who's running it, what they've done, and arguably if they're doing what they say they're going to do. I know those two sectors you can talk about at length. And I know we won't do that today. But another one that I've sort of noticed more so over the coming days is the gold and precious metals. And I know there's always this, when things are going bad, you hedge yourself, you hedge your bets, you go into gold. And you'd almost say, given the current environment that we're dealing with it and what's happening to potentially start October, gold would be an appetite for a lot of investors. But yet I think this morning it's come off a long way over the past, handful of weeks, and it's impacting a lot of the gold producers from big to small. So I just wanted to get your thoughts on potentially why that's happening. I know there's relations with currency strengths, especially the US dollar, and if that's having impact or what's driving the gold price down, or is this again a natural setup that's going to send gold higher in the coming term? I say this because I followed gold for a long time and I've actually pulled my hair out trying to judge what's happening in this environment because it just doesn't make sense. But what are your thoughts on that?
Yeah. Look, I mean, gold, I mean, it really has lost its shine. I mean, I sort of, pardon the pun. I mean, look, there's a number of drivers for gold, right? I mean, one is essentially is an inflation hedge. So as inflation goes up, traditionally, or safety haven, when there's uncertainty, gold traditionally has gone up. We haven't seen that the case because gold is inversely related to the US dollar. So as those 10-year bond rates, which is currently sitting around 4.7% and globally are still rising, the US dollar strengthens, commodities are inversely related to the US dollar. So we're essentially seeing an inverse relationship as the 10-year bond rates are going up, the US dollar going up, gold is actually falling. So look, across the board, even when we saw that only a few months ago, when gold in Australian dollar terms hit $3,300 an ounce, in US dollar terms over $2,000 an ounce, the small explorers did not follow through, Ben. And it was really the producers that really fought, once again, generated interest. So look, if you're a small cap gold explorer, I mean, my suggestion to you is seriously consider your operating costs. And the beauty about being a small cap explorer is you do have the ability to look at, at other commodities. I mean, there was a UBS article just yesterday about graphite. I mean, remember that out of a lithium ion battery, 50% is graphite. Graphite stocks such as Syra, CDT, I mean, what else? MLS, RNU, have been heavily sold off in the last, 3-6 months. So we're looking for value in the graphite space right now. Lithium being a hard rock, really in terms of the market is obsessed with rock chips and results and obviously putting drilling in the ground. Uranium obviously comes down to results, and we're looking for obviously things in the Athabasca are interesting, but it does cost a lot of money to drill there. It costs $1 million per hole. So the small cap explorers do need to find a joint venture partner to go out and put 20, 30, $40 million in the ground. But yeah, look, the beauty about being a small cap explorer, you can move, you can shift, and you can adapt to the market. But the key comes down to results. It comes down to results and execution.
And I mean, given your position, you're helping invest and do due diligence on all of these companies. And I've noticed it's been, I shouldn't say easier, but you have seen companies starting to do a bit more raising for particular projects that have got warrant. And I know that especially now that uranium's got a bit of intensity, there'll be probably a lot more opportunities within uranium investing as these things typically do. They haven't been able to tap the market for, a long period of time, but now it's sort of flooding into it. But what are you seeing really start emerging in regards to, I guess, opportunities for investors to get back in? And what are these companies doing? Because I mean, my initial thought earlier in the year was these companies were having to give up a lot to get investors' money, and I think it's still in a similar mindset, but it's starting to be where you can start seeing the value. They don't have to pretty much cut off the entire arm for investors.
Yeah, I mean, I've seen it. I mean, just for example, today, Ben, I mean, we caught him with a coffee for a client, and he said, "Look, this is once again one of the hardest markets he's been involved in. He's been involved in markets since 1987, and he saw that. He saw obviously the Asian crisis, he saw the
Mm,
GFC, and now, I mean, comparing that, he's just put things into perspective. Liquidity's really dropped off. Investors, as I said, are more shielding to safety and cash and fixed income. But look, everything moves into cycles, right? There's still money going around. You have to be very stock specific. You have to be sector specific, and diversification is key. I mean, the key for these small cap mining explorers or uranium or oil and gas or even in biotech, I mean, looking at your costs, I mean, if you've got high operating fixed costs, I would be very, very nervous in this market because guys like me will take a look at it and say, look, your costs are too high. We will give you money, but will be a significant discount with 1-for-1 listed options or 2-for-1 or 3-for-1 or something outrageous. It is a really a
mm,
buyer's market. What we are seeing, there is still things that are getting funded, but it is a buyer's market. The buyers are essentially have an edge over essentially the management teams. And I think, moving into October now, the market, the management teams are waking up and said, look, guys, like you've got 3 or 4 months worth of cash. We need to raise money right now, but you have to offer a very, very good discount and a reason, whether it is through an acquisition or a strong catalyst, in order to attract the new investors coming in. Because people are a lot more conservative, and why take the additional risk where I can get 4, 5, 6% returns in cash and fixed income if I don't need to, right?
mm.
So that's a key at the moment.
And I mean, a lot of the companies that we've talked about today, this was the purpose of us meeting together because the Market Bull is helping support the event that you guys are running at the Ritz Carlton. And a lot
Mm.
of those names you just mentioned before are going to be there. But I want to give you the chance really to talk about that event. And I mean, who's going to be there and why you're doing it, and I guess how people can go because that's got a whole host of different speakers and different commodities that's available for well, at least Perth-based investors, unless people want to make the international travel to come see it.
Yeah. So for those at home, Perth, haven't been there for 4 or 5 years. I mean, we had COVID. I mean, we're Melbourne based. We ran an event in Melbourne. It was a roaring success. We had 250 investors, 30 CEOs, 30 funds. We had a panel discussion. We want to replicate that model into Perth. I mean, obviously, we've got a lot of conferences out there. We're not looking to be a conference organizer as such, but it's a great opportunity for investors to come meet like-minded investors, CEOs. We've got a morning tea, a lunch, an afternoon tea, drinks and canapé, and we're all about networking. So we want everyone to network, to be, colloquial, to meet other investors. And really also the theme is Spotlight 2023. I mean, we've got Green Tech, we've got Titan, we've got Recharge, we've got InhalerX, we've got Vitus Resources, which is taking silicon sand and converting to green hydrogen under $2 a kilo. We've got Castle, which is on the graphite. We've got Cauldron Energy on the uranium, vinyl metals, Aura, Sabre. So we've got a fantastic lineup. It is free, Ben. So for those that are at home, please come down. Myself, Ali, Lewis, and Connor Daly from Peak are going to be there. But obviously yourselves and other groups. But we really just want to make sure it's all about networking, drinks, food, mingling, and having a number of themes. I mean, it's not necessarily one specific theme. You go to a lot of these conferences, and there's usually obviously a biotech space or oil and gas or medical devices. This is across sector agnostic, and really the theme is Spotlight, emerging trends, and it's all about networking and having a good time and catching up with people. So we are looking forward to being there, Ben.
Yeah, that's if I'm correct, the 25th of October. It'll be at the Ritz Carlton. I mean, I'll have a link up so people can get a bit more information about it. And yeah, from the look of the list, and you mentioned a lot of the companies now, there'll be a truckload of presenters and opportunities to start meeting with people and speaking with people. And as you said, there'll be morning tea, just a great investor, and it's in Perth. I mean, I can say with a bias hat, it's the city of mining. Every sort of mining company is here, but we're going to bring in a bit more talent from elsewhere. And I mean, that's towards the end of October. And you said at the beginning, like, I guess a lot of these companies, they're sort of agnostic. But I mean, when you're talking about like some of the presentations or what are some of the other details that are happening, like it's great to sort of speak with them, but what else can investors get at this event?
Yeah, I mean, look, every company will have 10 minutes and 5 minutes Q&A. We will be hosting a market panel, essentially property fund manager, family office fund manager type panel, which will be during the day, which will be very, very interesting. I'll moderate the panel, but I mean, we've got some great speakers on the panel as well. And as I said, the key really is to allow investors, fund managers, family offices and CEOs to mingle. We really want to make sure that it's network focused rather than sitting and watching a presentation. And hopefully getting a lot out of it. I mean, identifying great companies, mingling with other investors, and obviously we'd love to meet you and everyone else in the room. So it's going to be a wide array of different companies and presenters, but also obviously investor relations companies, I mean, CEOs across the board. So now, Ben, it'll be a great event. And as I said, we haven't been to Perth for 5 years. So just looking forward to catching up with everyone that we haven't seen in a long time, including you.
Yeah, well, it's been, again, the time disappears. I mean, this year's racing away, but it feels like it was a while since a lot of people have done these sorts of events. It's been great to see a lot of them get up and about again and bring people together, because you'd almost say, everyone was saying, oh, it's so much easier to just do Teams and these virtual webinars, but there's just got nothing compared to a proper handshake, a proper face-to-face conversation, all those things you take for granted. But I mean, if I'm putting you in the position that, yeah, like you've got this outlook over the next potential 6 to 12 months to really, I guess, specialize and figure out where you think the real drivers from a market or investment point of view are. It's very hard because this all changes very quickly. But if you're looking at that outlook, I mean, where do you see the real opportunities unfolding within the small cap space? If it's not necessarily stock, but
I think it's all about, not trying to pick bottoms, Ben. I mean, I think it really comes down to sort of what is moving. I mean, right now we've seen hard rock lithium. We've seen a little bit more of the rare earth in terms of meteoritic, and we've seen money flow coming into Canada and Brazil in terms of some of the asset classes. Biotechs have been out of favor. They might come back in there. I mean, we've seen a little bit of interest in psilocybin and psychedelics and the whole MDMA side. So there's a bit more activity in that space. Once again, we're not trying to pick up the bottom of the theme. We're trying to really ride that wave. Uranium, hard rock lithium, graphite, psilocybin, and potentially some biotechs. That's really my top sort of focus right now over the next, as we head into towards 2024.
No, it's good. I think that they're touching them off. Psilocybin is a very interesting one. I'm hoping to get someone on the show to speak about that in particular, because there's a massive growing interest in that as well, that many would probably be like, oh, I hadn't heard of or thought about that before, but it's outside of mining. But thank you so much, Niv. It's been a quick and short and sharp discussion about, naturally the macro outlook for a lot of these sectors, and of course the event, which I'll be there at as well. So if listeners want to come and have hello and say hello to me, I'll be there. We'll be around chatting with people as well, and yourself. And I think it's going to be a great event, and I'm looking forward to it. But yeah, thank you so much, Niv, for taking the time to speak on the show today.
Yeah, thanks, Ben. Looking forward to a beer soon.
Thanks for listening to the Market Bull podcast. If you enjoyed it, please make sure to like and subscribe. You can follow the Market Bull on our socials at Twitter and LinkedIn by searching The Market Bull. You can also subscribe to our newsletter on the website by visiting www.themarketbull.com.au.